Good day, class. Welcome to the second session of Financing a New Venture. In this session, we will identify and compare funding options and service offers by the finance industry for new venture. There are two forms of financing options: debit financing and equity financing. Debit financing is borrowed money and retaining ownership, whereas equity financing is where you sell equity in the business and you own a percentage of it. It is crucial to do research on the interest rates offered by different financial institutions so that you can make an informed decision and make a choice that is more suitable for your situation. Liability is different from business to business. Sole proprietors and partners are always liable to repay the borrowed money, whereas owners of close corporations and limited liability companies will be involved in paying back the loan. If they expose themselves legally by signing personal surety, the bank accepts fixed property, movables, shares, cash, and other means as collateral. There are existing institutions that help provide financing, private institutions, and government-sponsored institutions. There are four types of private industries that provide finance, and these are commercial banks, general banks, hire purchase banks, merchant banks, and lastly, NGOs and donor foundations. Commercial banks offer short-term finance, which is generally used for financing current assets, which can be used by any type of business. The banks do need some form of security, and higher risk customers pay higher rates. General banks and hire purchase banks provide medium-term financing for the use and purchase of equipment and vehicles. The loan should at least be 1,000 Rand. Merchant banks offer specialized financial services, mainly for corporate climate. They also offer other services, which include insurance, pensions, provident funds, trust, and leasing. When it comes to NGOs and donor foundations, we find industrial finance corporations that only offer large loans of minimum 100,000 Rand to excellent prospects only. There are private sector organizations that offer assistance to small businesses. Some operate as NGOs using donor funding. Government-sponsored institutions that provide finance, including the Industrial Development Corporation, Business Partners, Development Bank of South Africa, and the Land and Agricultural Bank of South Africa. The Industrial Development Corporation, also known as the IDC, grants long, medium, and short-term credit to large businesses that find it difficult to get funds. They provide a portion of the funds and they take equity. They aid in financing exports and imports of capital goods and services, though the goods and services that get financed need to be competitive on the international market. Business Partners, also known as Small Businesses Develop Corporation, or the SBDC, offers loans to small and medium businesses for the duration of 3 to 10 years and provide assistance such as training programs, expert advice, and the provision of business sites. The Development Bank of South Africa offers medium and long-term loans. They also provide assistance for industrial ventures in less developed areas. Land and Agricultural Bank of South Africa provides aid to farmers, cooperative agricultural societies, and companies. They offer farmers short-term loans with collateral on their crops, intermediate and long-term loans with collateral on the movable assets. Cooperatives are offered short or long-term loans. Kula is funded by the Department of Trade and Industry, and it offers loans and seed funds to retail, financing intermediaries who need capital. In general, the nature of loans differ, and it is very crucial to do a thorough research before making financial decisions. For instance, some institutions have a criteria which you need to meet in order for them to be able to grant you a loan. I advise you to go through all requirements and conditions in your learner guide so that you have more information pertaining financial aids. We have come to the end of our second session. Let us take a break and continue with the unit standard in the next session.